guys, just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. New month open and new quarterly. Nice to see the September stats for the month held nicely. And as mentioned a few times, there was a small chance to take out the monthly low with roughly 2.4%, which is not impossible but unlikely, especially if the support is holding. That support level provided us with two trades, well, more or less, not from the exact level because I couldn't add to the position. But anyway, the plan was not to turn bearish in September based on support, statistics, and other things I showed, not only on one factor alone. Now with that, we put our new monthly stats levels on the chart and see where a possible range would be based on the stats. Before I start, quick reminder to join the Patreons if there's interest to learn more, or join the copy trading program where I slowly execute trades. It's a low-frequency strategy, but all that matters is that it's profitable. Okay, now let's start and see where the levels are. And now let's see where the midpoint of the previous cycle was, and if there's something to look at. I marked out the high to low and the closing basis. Okay, what we can see here is the normal 50% fib from previous quarterlies on log scale, and the retraces from the last quarterly in the cycle end that we have at least now a 4-year cycle. If that changes in the future, we can adjust it, but for now I go by what worked in the past. Anyway, if we look at the retrace, we can see only one of them hit the 50% level of the previous quarterly, and that was the one in the early years. All others, we can see, didn't even retrace to the 50% mark for me. The entire candle from high to low. Well, that can give us the conclusion. If there will be a pullback, that level would be a level of interest, but also need to keep in mind that it's statistically low probability to hit it. And yes, that's not much data with only this few cycles, but in the future we'll get more data, and we don't only trade based on one fact. Anyway, for now this is one fact. The 50% is support, and it even rarely gets hit. Now, if we look at the retracement from candles on closing basis, we can see almost the same story. Only one of them retraced back to the midpoint of the previous candle. So here we have more or less the same data. Now, if we look at the current situation, we can see price opened right at the midpoint of the previous candle. That's interesting, and also didn't happen before. Anyway, if we take the candle based on the close, we can see the midpoint. That, as we saw, only once was reached. But anyway, as there's not much data, that's just acting as confluence. But we can say that the midpoint is support if it gets reached. That's now at 110.553K. With that number, we switch now back to the monthly statistics and see if there's something aligning. And here we can see, yes, the monthly wick levels align with that area. It's an average and the median, so they don't have to be hit to the dollar, of course. But we know the area from 110.553 to 109 and 107 is a nice level to watch for if we get a pullback for the wick formation. Not only for the month, but for the quarterly as well, because we combine the monthly stats with the retracement for the quarterlies. Another thing to add are the monthly closes that we looked at last time. We can see it here on the returns for the months. We can see whenever September closes green, we usually get follow-through with the next months as well, at least 2 of them. Now, I personally don't look at this returns data down there because, well, you can see based on that people expected a negative monthly close, which didn't happen, sadly for them, but lucky for us, since I don't use only one thing to look at the chart. Anyway, from here, I just take away the simple visible thing. If September closed green, we saw at least 2 months follow. Can it change? Yes, of course, but we work with data, so if it changes, we adjust it. Now, by looking at the monthly stats, we can see the average loss is around 15%. That's basically 101K, which means price would trade below the previous quarterly low and also below the 0% retracement, which for now never happened. The level is statistically there, yes, but not something I expect unless it happens, because it has for now lower probability. If price breaks support levels, then, well, yes, one can look at it and maybe aim for it if there are no signs of strength. But for now, I can't give it high probability. But even if that happens, if we look at the lower time frame on the weekly, and remember what I was showing in the last public video, you'll see this average move would land in the weekly order block support level. So that would be another confluence for this level. But as said in the previous video, and now, as long as support is holding, I don't aim for that. Now, if we look at the other side, we have the bearish wick formation that sits at mid 190K, which structure-wise would not be bad, as this would be another higher low formed. And the average gain is at 144K. That's basically the range for this month. You just need to choose in which direction you want to trade it. For me, it's now one direction until proven otherwise. And I will look to get involved on the wick formation. That means if we get a move down to around this area from 50% of the previous quarterly on closing basis, and the area with the monthly average wicks, that's where I look for a setup. Okay, now the chart gets a bit messy as I add the local levels. But one look at the monthly momentum before that, we can see it opened higher, of course, and sits now at 113,400K. That's more or less where price is at now. So to keep the momentum up, we need to see price hold this month above this level, which means this level should give us soon a result, meaning a move. If we look at the quarterly, we can see it's now at 104K with the momentum. That means price can always test these levels, but as long as it's above, it remains up. So unless we see this quarterly closing below 104, this will most likely remain up, even potentially for the next quarterly as well, if the conditions are met, of course, and that we'll see when the time comes. Daily momentum sits on 109K. That's our previous support level and around the midpoint for the quarterly and the average wick formations for the month, meaning another confluence for this area. Now, time-wise, we can see October usually forms the lows in the early days of the month, on average around day 9. Yes, there were some earlier and some later, but the average is basically the first 10 days. So that's the time window where I look to get involved in the next move if we get the retrace. Well, if not, I'm already positioned as you know, and the trades remain active for now. But if we get a retrace, I will look to get involved on the confluence levels. The volatility on the weekly time frame is at the extreme lows, and I showed you in the last video that often it's around the bottom formation. Yes, there are ups and downs, but they were on decreasing volatility, so the retraces are more or less to see as opportunities. That means we could see a range here or wick formation down, but I would look at it as opportunities, even with a move below this area, because that would be a move into the other confluence level. And of course, for some signs of strength, it would need a reclaim of that level. It's basically the same thing I explained earlier, but now combined with new stats that support these levels. And I will keep you updated, of course. And that was the part with the monthly stats levels and the quarterly. Easy to follow, in my opinion, and what to look for if we get that retrace and the levels are clear. For the quarterly, it's the midpoint and the monthly average and median wick. The more local bearish side is breaking this support level and making what for now never happened before, and that's going below the quarterly midpoint. I personally don't bet on these things, but everyone sees it differently, and even some people can have sometimes luck. Anyway, now let's mark out the local daily averages and see what we have locally for day trades. Okay, we can see based on the averages for today that if there is no bigger volatility, price would not break below the local SR level. Of course, I mark out the average max moves as they sometimes happen, but I don't expect them every day. For now, the average loss is at the weekly open, and that's exactly the same level where I was looking for a day or scalp trade yesterday. So this remains unchanged, and the plan remains the same. For the upside, the average gain sits at our next range area, where price already rejected twice. So all in all, price is in a range here as before. And if it reaches that level, it can continue to range before making the next leg up, which I expect to be to the upside, unless some statistic changes and we see more signs of a top formation, which is not the case right now. If the range here continues, well, that would be a potential retrace to our levels, which have confluence, so a level to act on for me. That's all. No financial advice, of course, as some people can have some luck sometimes, and I can be wrong sometimes, and that will happen at some point. One needs to have enough capital for the next plan, and the next plan, and so on. For now, this is my view. Now let's have a local look on lower time frames. Okay. Yesterday, I had these two trade ideas. One was a local one from the upper part of the level with TP1 on the open range and the high, and the other plan was from the weekly open with the confluence at that time. For now, nothing has changed. Of course, the first one played out, but I was not involved. So the next scalp or day trade would be from the same level as yesterday. Based on the signs down there, I will also decide if I add to the bigger trade or not. Best case would be, of course, to fill some of the stats, like at least hit the 50% retracement for the quarterly. We also have a CME gap there, so yes, this level is still to be kept in mind as long as price is in the range. But I also acknowledge that price opened right at that quarterly 50% level if we take it from high to low. So I'm not in a rush, and either way, I'm still in my other trades which I shared. The same goes for the rabbit box trade, where I expect the target to be hit. Overall, I'm still looking for higher prices until my statistics and price prove me wrong. With that said, I'll leave you with this local setup I was looking at yesterday, and if we get a deeper retrace, you know what to look for. For the bullish case, a wick formation. I will update in Discord and Telegram when I take the next action, like a new bigger trade or a take profit. I try to stay transparent, because I think that's something really missing in trading communities. From me, you don't only get knowledge if you join the Patreon, but also transparency as well. And not only there, you can also join the Discord, where I post some updates as well. Until then, I wish you a nice day, and see you in the next one.